So I would say compliance, a lot of companies are already doing. Risk management, which is process of identifying risk and managing risk and so on and so forth, you will see companies at extreme end, and some companies have not even thought about it. And there is no specific method or way you can put a yardstick to it saying that insurance companies are good and others are not good. Typically, yes, you will see that companies which are regulated, which is like IRDA for insurance, RBI for banking, they would typically have little more awareness of this. They have risk officers and they have teams and initiatives on that basis. Whereas enterprise companies who are into manufacturing and so on and so forth may not have thought of these ideas so much. So you'll see a range of people looking at that. Governance, very, very few companies look at it because there is no hard and fast requirement for governance like risk management or compliance where your customers are asking for it or the regulators are asking for it. Governance is more internal. It's about the management wanting to see how it goes and what happens and so on and so forth. Like I would presume that after Satyam, the board of directors of larger companies would have to much stronger governance mechanism. They would want to look at things much more strongly right now. Not that the frameworks are not there. I mean, board of directors and the roles and all that were defined even earlier, but I think now people are more focused about what they want to do about it. So financial governance or market governance or even information governance, very few companies are doing that, but as and when these incident kind of things happen, you will see an upswing of people talking about it, and that's how things will go forward. The other aspect, if I can complete, is also the industry, which the service providers who are offering these services. They come at various levels of maturity as well. There are a lot of companies talking, yes, compliance is possible and they can do compliance very well. Few companies can do risk management very well. Very few companies can do governance very well. So it's like a supply and demand pressure as well as to who can do what. Whenever I talk about the GRC tools, I always tend to think it as a cart before the horse problem. Okay, you see the issue. What is a GRC tool? It's a tool basically which automates your controls and your matrix for governance, risk, and compliance. And it's supposed to throw up a dashboard. It's supposed to give you intelligent information based on how the matrix are doing and what actions you should do, take care of. So it's an automation tool for something. All automation tools are mechanisms of implementing or automating or making a process more efficient. So first thing which should be there is the GRC process and not the tool. A lot of companies, at least in my opinion, make the mistake of putting the cart before the horse by buying the tool first and trying to force fit a way of doing things into it. The companies which are successful, in my opinion, who have been successful in doing this, have a very strong risk management, governance, compliance process in place. More importantly, it's a unified process. I'll explain to you what I mean by unified process. Let's take you have a IT services company. They provide services to customer A and provide services to customer B. Typically, you will see three frameworks operating here. A framework which the customer A has asked for, a framework the customer B has asked for, and the third one is the framework which the service provider has himself. If you have three different frameworks and put a tool on top of it, it's not going to help. And hence, rationalization of all these frameworks is critical. Then you take the most stringent aspect and then put it together. Have a common process framework and then automate it. That's where it makes sense. Which is why you will see that most GRC implementations do not derive the benefit they should because rationalization is not there. And more importantly, the process is not strong enough to automate. Automation cannot solve a problem. It can only make something more efficient. I'll tell you a simple example of a smallish company, not very small company, as to how our services benefited them or what is the right way they should do things. So this, for example, is a credit card processing company, which basically is a company which processes credit cards for a number of customers. And their customers are banks and credit card companies, international, domestic, and so on and so forth. So once you do that kind of a business, which is obviously very sensitive from an information standpoint, CVV numbers, credit cards, and so on and so forth, security or compliance is a big thing there. So there are international compliance like PADSS, PCI DSS, which they have to go in for. At the same time, these various customers they enforce their own policies, frameworks. So the problem I was stating to you, that having a multiple compliance model to look at, is what this company was facing. But there was no way out because they had to do it. So actually they used to have a response ready every time some audit used to happen. So they used to respond in a specific way to customer A, in a specific way to customer B, and specific customer C, as well as a specific way to the regulators or the compliance. So they were really stressed, what I call as the audit fatigue. Okay. So one was they were spending a lot of time in these multiple compliance aspects. Secondly, when you do things on a piecemeal basis, you're actually risking too much because you actually don't do the right risk management. You are just reacting to a specific way of doing things, right? So, and these loopholes are what get exploited when data breaches and all that happen. So this was the problem statement. They were not secure enough. They were spending a lot of money on compliance. So what we offer to them as a service is first and foremost a rationalized framework, which basically is one common framework which could help them manage risk from a compliance standpoint and a risk management standpoint to all customers, to the regulators or the compliance agencies, and to themselves as well, because finally this is their business. So now what they do is they have a common framework, and they don't need to respond to customer A differently than customer B differently. They say, this is my risk framework. I have incorporated your requirements into it. In fact, this framework is more stringent than what you want, and hence come and if you want to audit, this is what I do. So they have their common framework, simpler to manage, effective, and much more cheaper than before. What do we have which we want to protect? Okay, and as a consulting or a services company, the most crucial information I have is customer information, right? That is the most crucial thing for me. So that is what we focus on our entire efforts on, our risk management framework on, as to how do we protect our customer information. So that is my framework. So what we do in that framework is deploy processes, technology, and people aspects to control those environments. As an example, our entire IT services is a cloud-based model. So we do not have any local or within the company kind of implementation. Everything is a cloud service, from mail to everything. And we make sure that this service provider we choose has the right security controls, data protection controls. We have the right contracts with them in terms of what they are responsible for, and we have the right matrix coming from them so that we can test it. We also have the right to audit, and we actually do a lot of tests on these service providers on an ongoing basis. Secondly, the information which is there with us locally in our machines, for example, our laptops, for example, we make sure those are encrypted for customer information. So we deploy controls around that so that we make sure that we don't reveal customer information. The third most important thing is that we are very specific with our contracts with customers in terms of data retention. Let's say I'm doing a test for a bank. Let's say I'm doing a code review for a bank, and I've finished the code review. Once the engagement gets over, we are very clear to the bank that we are going to return all the information back to you, and we are going to purge all the information we have from you with us. And hence, things like they are going to ask a report copy again from us is not possible. So we put all these things together to come up with a framework for risk management for us as a company.